Good morning, everyone. This is Marshall Giller bringing you the morning comment for December 15th. Japan was in focus this morning following the lower house election on Sunday. The Liberal Democratic Party and its coalition partner increased by their representation by one seat. This should strengthen Prime Minister Abe's hand in carrying out economic reforms. Perhaps the one area where Abenomics has been successful has been in weakening the yen. I expect that trend to continue next year. Nonetheless, the disappointing Tankan survey seems to have been more significant for the markets than the election. Most of the indicators failed to match expectations and turned lower, especially the key large manufacturers outlook index. Japanese stocks fell on the news, pushing dollar yen back down so that it traded more or less unchanged from Friday's opening levels. Oil prices continued to fall after the UAE's oil minister said that OPEC will leave output unchanged even if oil prices fall to $40 a barrel. The International Energy Agency Friday lowered its forecast for oil consumption next year while simultaneously raising its forecast for non-OPEC supply, just a month or so after revising its forecast in November. With news like this, I expect the commodity currencies to remain under pressure at least until oil finds a bottom. Now, the Australian dollar was additionally hit after Australia's treasurer said the budget deficit would widen significantly because of the slump in iron ore prices. The worsening terms of trade are likely to keep the Australian dollar under pressure, in our view. RBA governor may yet get his wish of Aussie dollar at 75 cents. As for today's indicators, there are no major economic releases due out during the European morning. In the U.S., industrial production for November is estimated to have risen. The Empire State's Manufacturing Survey and the National Association of Home Builders Housing Market Index, both for December, are expected to show some improvement as well. These data could support the dollar somewhat. For the rest of the week, the highlight will be the FOMC meeting that ends Wednesday. Now, after the committee ended its quantitative easing program in October, expectations are now that they'll continue to normalize policy and drop the considerable time phrase from the statement following the meeting. There are two other central bank meetings this week. Sweden's Riksbank meets on Tuesday. The country remains stuck in deflation, which makes us think that the Riksbank will move towards unconventional measures, perhaps even at this meeting. The Bank of Japan ends its two-day policy meeting on Friday, but no change in policy is likely. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.